Welcome back, guys. This is your boy FMA. It's another video here. Today we're talking about US oil. As we can all know, commodity prices are going crazy, energy prices are through the roof. So yeah. So first, by looking at, it, we can just tell that this is a bullish trend. It's a bullish chart pattern. So obviously, we can tell that price has, been on a very, very bullish run. As you can see from April 20th all the way to this month, we can see that price has been going on a very serious trend here. So now looking at our what we call it our monthly time frame, we are in a retracement zone as we can see. So in order to see how like our retracement will get, we first use a Fibonacci, um which kind of shows us that you know our Fibonacci tells us that our retracement zone is, which is 38.2, which is one of the ideals ratio. Well, the golden ratio is normally 61.8. Obviously, in reverse, it's 31.8 as well because on the bearish trends, you flip it. So therefore, so as we can see here, we are expecting price to retrace to this zone, which perfectly in lines with the trend line to see a continuation upwards to towards 148. Or that's how the bullish cycle is, as it's like a wave. Price goes up, comes down to collect some liquidity. As because traders are emotional, so we trade. We always take profits, which is in trading is called a retracement. You know, quote unquote, which is basically traders taking profits from their trades they have entered. So that's how it works. So yeah, that's the week. That's the monthly time frame already, and we're already seeing that we're in a retracement zone. So looking on the um, weekly time frame, we can see that price hasn't still fully tested this monthly, what we call monthly retracement area. As we can see, this is a price area we're expecting price to come and touch. So therefore, and looking at the current price action, we can see that price came to the um lows of this area of this. As we can see, based on historical price data, we can see that here was a resistance zone for price break and went up. We were seen as a support zone, another support zone going up again. Price has tested it twice, so the first time, the second time, and the third time. So which is already indicating that this is a very strong weekly support zone, indicating that price is incentivized or is more likely to go and test the last support. I mean, the last resistance zone. So looking at here, we can tell that this area is a POI, meaning price of interest, point of interest, based on our weekly time frame, and which aligns with the fact that we can tell there's a bearish, there's a bullish weak candle suggesting that obviously the bulls are not in control of the price, which here is obviously another similar, you can tell similar price candle here. Looking at this trend where price went down, came down to test nearly the support zone before continuing is that. So obviously we can see this, and all this has already given what we call a head and shoulders. If you look at it on a trading standpoint, so went up, down, you know, tested the resistance, and now. So what we're seeing now here is a retracement. So meaning that price is more likely to go and collect liquidity. And what is liquidity? When you know price, left some candles not fully filled up. So therefore, this is liquidity zone for sellers. So liquidity zone for sellers slash buyers. Um, in this case, as we because we're expecting based on the month, we're expecting price to go and touch this this price zone area here between 83 to 88, which is basically 90. So yeah, we're expecting price to go and touch this range here before we can correctly see a continuation on the upside for US oil, as you know the charts say. So yeah. So back on what we said, yeah. So then I would be expecting the retracement to go and test this last resistance area before we can see a continuation downwards on the weekly time frame. So yeah, so currently right now prices is in a bullish cycle. As we can see, it failed to break this key support zone here, insinuating that price has to go and test the last resistance to gain some liquidity and drop off one more time to come and test this support, key support monthly zone, and then we can see maybe another inverse head and shoulders before a continuation towards the upside to collect all these liquidities on the monthly time frame, as we can see here. So yeah, that's going to be in the future somewhat. But yeah, so right now we're in a bullish cycle. Price is expected to go and test this area of resistance between the 107 to 110 or 111 price range. Now on a daily time frame, it's quite a similar thing. So therefore, since we understand that both weekly and both monthly and weekly time frame, it's suggesting that price should be um, going to test the highs of this trend, um, or basically going to collect all the liquidity that is left for our, you know, for our continuation towards downwards. We'll be expecting a bit of a what we call obviously this, and first of all, we can see what we call a double bottom, which is a confirmation that price is in a bullish cycle or a start of a bullish cycle. So therefore, this candle should close bullish, and then we can maybe expect a what we call, so price obviously goes up, you know, and then comes down and tests the neckline of this double bottom before we see a continuation towards the POI, which is the, you know, which is point of interest for US oil. So yeah, so point of interest, price of interest. It's very, very important that we mark um so we mark this price range. So price of interest is this range here. So therefore we got to make sure that, you know, this a range that I can see sellers coming in and forming a weak bullish candles, and obviously automatically waiting to come and test this range or going out and test our monthly support range, which is obviously I said it's between 83 to 88. So yeah. So yeah, so yeah, so based on what the monthly, daily, and weekly time frame. However, if you're doing day trading, the daily time frame is already giving us understanding that we will see a continuation based on a fact that we have a double bottom and price is looking to go up and come and test the neckline before we see a continuation. So therefore, on US oil, you should look on buying, not selling, based on our monthly, weekly, and daily time frame. So yeah, so that's my take on US oil, guys. Let me know what you think in the comments. Do you disagree? Do you agree? What do you think? And yeah, so take care, guys, and see you next video.